The market sold off hard today after the Fed cut rates, but suggested that they're not going to make as many cuts into next year. It's not the news, it's how traders take the news. And we saw the S&P 500 SPY ETF, just the ETF, sell off 18 points. That is significant. On top of that, SPY also triggered one of the most bearish patterns, an ascending triangle. Guys, it was getting really tight up here. And while we were waiting for that Santa Claus rally, which some are saying still could happen, we did not break out of this pattern. In fact, we broke down and officially triggered it. So what is next for the market? Again, I'm looking at SPY that follows the S&P 500, and we hit our first support today at the close around 584. Now, this pattern is suggesting the trigger could take us all the way down to 555. Again, we triggered a very bearish pattern, an ascending triangle. By triggering it, I mean we confirmed it by breaking down. Now, we did hit our first target, as I just said. The second target on the way down is 573. I hope you guys are writing this down. And our next target after that is 563. So it looks like we're going down in 10-point increments. And the final target, the completion of the pattern, would be 556.67. Now, there are a lot of targets on the way down there. Traders will expect these to be triggered and maybe make some sort of reversal. Some of you call it a dead cat bounce. Some of you call it a bear flag. We start to sell off, get a little bounce, and then continue to sell off. All of these areas, you want to look for either a reversal, and we somehow can break back above this triggered pattern and then continue a brand new market, or we will continue to drop down to that final target again, 556.67. I almost wish it was 555 for an even, but 556.67, final downside target. We'll see how it's more like not a Santa rally. We got a Grinch sell-off.